ladies and gentlemen. Hello, my name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com. And today is Friday, ladies and gentlemen. Welcome. We made it. It was a busy week. We had a lot of events and we still are having the events, and the market is still going crazy in my opinion, but hey, that's part of the deal. That's the world we're living in right now. So look, we had a few events that I think worth mentioning. So I'll talk about all those in the webinar right now. So stay tuned. Hopefully you'll enjoy the session, and I'll see you in a bit. Alright, ladies and gentlemen, hello, and good morning. My name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com. And today is Friday, ladies and gentlemen, Friday the 17th of October 2025. And yeah, we have made it to Friday, ladies and gentlemen. We had a busy week, of course. We had a lot of events, but yeah, we survived. Anyway, look, I'll talk about markets. We'll see what's happening. We'll wrap up the week, prepare ourselves maybe for next week, but maybe actually prepare ourselves first for the US opening bell, because to be honest, I think that something tells me that we could see a very interesting Friday today. Look, about all this and a little bit more in a moment. Just first, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. I'm going to do my usual good morning in the chat room. Good morning, everyone. There we go. So yeah, like I said, yeah, ladies and gentlemen, Friday, finally. Okay, look, also I wanted to actually mention about our Markets.com website, which kind of disappeared here from the screen. Yep, our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. And also the webinar that's coming up, and that's going to be at the end of October on the 30th. And so basically join in. Is going to be I'm going to be talking about Bollinger Bands, because again, this is one of the top indicators that people use. So this is going to be the third episode in the series, which I'm currently running, where I'm talking about the most popular indicators, trading indicators, and how we can apply them in real life. So I'm entering live trades on our demo account, and yep, to see just purely based on that indicator in question, and to see if it works or not. So join me, and yeah, well, I hope you'll find it useful. Ladies and gentlemen, let's have a look at the economic calendar very quickly. First of all, let's refresh it, and just wanted to quickly run through Monday, Tuesday, Wednesday, Thursday, and jump into Friday. So on Monday, Canada was off. We had a trade balance number from China, which was a little bit of a disappointment, to be honest. Germany came out with some figures, but nothing major. Tuesday, then we jumped into NAB business confidence, which kind of improved, I would say. Showed an improvement at least. We then had the British job numbers, unlike the US, so we actually got those. So yeah, the unemployment number came out a little bit on the higher side, so that's not a very good sign, of course. This is something that the BOE, the Bank of England, will have to consider for sure, because again, employment change really dropped. Look at this, from 232 previous K to 91K, and yeah, that's I would say that's a little bit of a disappointment. So that's in terms of the UK numbers. Then we went further. We had the ZEV economic sentiment from the Eurozone and Germany itself. Not the best of numbers, I would say. The European one especially. The German one was kind of okay-ish, you know. It was higher than the previous, but still worse than the forecast. In terms of other events, look, given that we have an absence of US data due to the US government shutdown, we're getting these Fed speakers who are trying to kind of, give something to the market here, and, trying to at least kind of, make the market not attractive. Sorry, well, yeah, kind of, make the market still interesting. And I think that if suddenly you have an absence of data, suddenly if you have an absence of, let's say, the key important data coming out, then the market participants might think that, what, maybe actually the market is not that good, and maybe, we should be actually looking towards the downside. Well, I mean, I'm not blaming them for that idea, for that thought, because again, in general, if you look at the numbers, look at US job numbers, for example, right? I mean, those are not really good. I mean, I think that the U.S. government shutdown came in just on time to not to show the bad NFP, right? So I think the ADP was already a disaster, and then very quickly, I think that they were so afraid that they will see bad numbers on NFP that they went into government shutdown. I mean, okay, look, and this is just a theory, okay? I mean, this is just the thinking out loud, and that because otherwise, all those planned deals, like all these AI deals between companies, that we have been seeing this week, last week, those probably could, not matter much, because again, we understand that, and this is what everybody's talking right now, that we have two economies. One's like technology and AI, and the other one is the real economy, in terms of, let's say, what's happening in the labor market, and that there are issues. We're seeing that AI is kind of taking away jobs, that's for sure. We're seeing big companies slashing jobs. The most recent one, actually, let me just double check, because I think Nestle is slashing 16,000 jobs. I mean, that's big. That's 16,000 jobs that they're slashing, and that's wow. So if you want it or not, that's kind of the effect of AI. If you like it or not, if you're a strong supporter of AI, look, yes, on one hand, it's kind of, one hand is giving, the other hand is taking. So you're creating better, you are optimizing business processes better, and you're creating more, a more interesting, like, approach for the business in terms of cost saving. However, it comes at a cost, at the just human cost. So I think that a lot of people are kind of focusing on AI, but actually don't understand that you should also think about the transition period. Not only getting from A to Z, but in between there are also letters, and in between you have to kind of go through these obstacles. So yeah, I mean, like I said, for now, like I said, we'll see how it goes, but certainly it is raising concerns, especially in the labor market. Now, going further, Wednesday, what did we get Wednesday? China inflation rate came out on the lower side here, and then the forecast better than the previous, of course, but near the forecasts, basically, and the forecasts were not the most spectacular, I would say. And yeah, we got the numbers negative. That's not good, because again, it's showing that there is a lack of growth. So we'll keep on monitoring, of course. That's the only thing that we can do, right? I mean, at the moment, and we can wait for the big meeting between the two presidents, between the Chinese and the U.S. president, to see what's going to happen, what they're going to agree on. Anyway, going further down the line here. Mortgage rate, okay, they came down a little bit. The 30-year mortgage rate, that's an interesting metric here, and don't forget to look at that one. Canada, we had a few numbers here, but nothing major. It's like I said, it's mainly Fed speakers that are trying to keep the market alive, and well, we so far I think they're succeeding in that. Going further, Australia showed its job numbers, and to be honest, unemployment ticked to 4.5, which is not critical. However, not a best not a best scene that you want to see. So yeah, we're seeing this nice or nice, not nice, maybe, I don't know. This push to the upside here on the unemployment side. So maybe also we can attribute that to right now instability in the market, because again, the market, although they're rallying, but the real economy is not really showing good signs, and everybody's now referring to the B word, so the bubble. And it eventually it has to pop, but nobody knows how strong the bubble is right now. Maybe it's going to last us for longer, maybe it's going to last us for shorter, but certainly it is something to watch. Okay, look, going further, we got the numbers from UK. We had some GDP figures here, month on month improvement here, you can see, but on the year-on-year side, we had a bit of a problem. Industrial production from UK, I mean, year on year, look at this, boom. Okay, month on month kind of improved, but the year on year is struggling. Wow, manufacturing production, let's have a look at this one as well. That's the same story. So basically production in UK is not the strongest sectors right now. Okay, Philly Fed Manufacturing Index came out. That's at least something we got from the US, right? And Philadelphia Fed Manufacturing Index minus 12.8, ladies and gentlemen. I mean, okay, that's not the best of the numbers, I would say. We had the bad one in April, but we understand, why. April was a bit of a problematic month. Anyway, so. Of course, we'll continue monitoring the situation, but I think that right now, economic data, unless it's US CPIs or NFP, nothing else matters. Or maybe ISM still, it's still okay. Anyway, Fed speeches, there we go, Fed speeches, Fed member speeches, yep. Those were coming through. Yeah, like I said, it's more of a, trying to support the economy with, with something, at least giving the market something to feed on, so that nobody would start kind of selling right now. And certainly, yes, today we're getting the final CPI number from the Eurozone. So the core rate year-on-year final number is expected to remain the same at 2.3. The headline final number is expected to increase a little bit. Now, this is the interesting bit. So, look, first of all, European data most of the time kind of comes up in line with the expectation. So that's why it's sometimes boring, because there are no surprises there. However, on the other hand, maybe somebody will say, but at least they can, they know what to expect, right? And they can position themselves carefully, which is, you cannot deny that as well. But the fact that the headline year-on-year number is expected to come out at 2.2, higher than the previous, now that's pushing above the ECB's target of 2%. Is the thing for the ECB of continuing with the low rates, is that coming to an end, or what? Because look, EU interest rates, and that's interest. There we go. That's how the ticker goes. Yep. So basically 2.15. That's where we're sitting right now on the ECB side, right? And look, with inflation starting to pick up, the question is, are they going to continue with the low rate, or actually are we going to see something of a tick up because okay, they're not gonna, if inflation picks up right now, they're not gonna go for a hike straight away. No, I think they still want to boost the economy, but the thing is that I don't think that they're gonna drop below 2%. So it's gonna be very interesting if they would, but I don't think that they're gonna drop below 2%. I think that they're gonna keep the number above that. So, yeah, I would say this way for now. For now, you normally set your interest rates differently here. Anyway, I'll pick up on that in the next video, to be honest. But long story short, we're watching this carefully. For now, if the ECB continues with those low rates, then certainly we're seeing a little bit of weakness in the euro. However, the euro is stronger just because of other currencies like the yen, like the US dollar, which is just basically getting hammered right now. The US dollar, also the Japanese yen is a little bit struggling, but and that's why they don't need to really go for for hikes on their interest rate, even though the inflation picks up. That's okay. They can the euro can just go higher just based on other currencies, other currency weakness. Anyway, we'll keep on watching this one. There's going to be an interesting number coming soon, so we'll see what kind of number we get there. Going further, today we have the U.S. building permits and housing starts, which I doubt that they're going to come out. We'll see, but certainly yes. We're waiting for data. We're waiting for data. We're waiting for a lot of data. We'll see if that's going to come out or not. Anyway, so ladies and gentlemen, let's jump into the stock market and let's see what's happening with the indices. Look, Japanese Nikkei 225 pushed higher, pushed above the 47,728 zone. I talked about this one. I said that if we do climb above this area, I'll go higher. We did. But then today we're kind of drifted lower here, and we still remain below this hurdle. So in a way, this is kind of raising concerns of a further move higher. So that's why I'm not really gonna speculate too much on this one right now. So if I'm looking for some higher levels, I think what I need to do here is just keep an eye on the current all-time high near the 48,597. Or we can round it up to 600 here, so 48,600. If we do clear down, a forthcoming higher high will be confirmed. If we're looking for some lower levels, then a drop below the 46,593 territory right here would be nice. If we do get a drop below that, then yes, the next target here is this upside line taken from the lowest point of April. And then yes, we'll kind of go from there, because first we'll need to see if we can get that larger correction back down. If we can, okay, great. Potentially more sellers here could join in, maybe on a break of this upside line, but let's not rush into things. Okay, China 50 is not loving the morning today. We're seeing weakness. Okay, look, we know that there's an ongoing kind of sparring between U.S. and China. Recently, we saw, this week actually. Well, recently, I mean, this week we saw the throwing out tariffs. U.S. throwing out tariffs on China. China just said, we're not going to buy soybeans because, well, look. It was really interesting to see, like, when the U.S. leader kind of said that it kind of came out of the blue, right? But I mean, like I said before in my previous videos, that if we were talking kindergarten language, then you started it, So, but of course, that's debatable, and anybody can say that, oh, like, but China this, China that, but at the same time you can say U.S. this, U.S. that. So I think that one thing we know for sure, that the two cannot really live without each other. It's like this kind of toxic relationship. However, you can live with them, but you can't live without them. So yeah, that's the thing that's happening right now with with the U.S. and China relationship. Anyway, we'll continue watching this telenovela because it's going to be interesting. Who's gonna give up, or are they gonna reach some sort of a consensus? In my opinion, they will. They will reach something, but yeah, it's not gonna be pretty. I think it's gonna come at an expense of the market. Anyway, so right now what I'm watching here on Shanghai Composite is if we do break this upside line here, taken from the lowest point of September, then yes, I'm going to consider a move to the downside. Jumping into the Dow Jones Industrial Average. So yesterday, look at this beautiful thing. I talked about this structure, this price structure, and I said to you, look, if we do push back above the 45,785 zone, this is what I talked about in the beginning of this week, then I'll consider a larger correction back up here. We could test this downside line. We did that. We did test it. We did break it on Wednesday, and we failed to stay above it. Look at this. Look how well this downside line provided resistance. Great. And yesterday we flirted with that downside line again, and we failed, and we drifted lower. So we're now seeing this the indices kind of on the cash indices are just losing a little bit of ground, and because again it's like I said, the market is worrying, But what I'll do here, if I'm looking for some lower levels, I would actually prefer to wait for a drop below Friday's low. Look, I'll start aiming for the downside if we do drop below the 45,785 here and we stay below it, then yes, I'm going to slowly aim lower, but I'll get more comfortable with the downside on a drop below the 45,472 territory, 470 zone. There we go. And then my next target is the 100-day EMA. S&P 500. A similar story, great move here, great move to the upside, tested this upside line, and yep, now the question is, can we drop below this 6,551 territory, which is kind of near it. First of all, that's the low of the 17th of September, and also the low of last Friday. Remember last Friday when we got that big crash because of one post? Well, that's what we got, that's what we get, and that's what we have. So for now, I'm watching this hurdle, and if we clear that, a forthcoming lower low will be confirmed. NASDAQ, similar story. Look, in general, this is forming something of a bearish flag everywhere. Look at this. I mean, these are bearish flags. So this is a pole. This is a slight correction higher. Looks like a bearish flag. It looks more clear on NASDAQ. So what I talked about, I said that if we do stay somewhere below the 24,781, 82 zone right here, I'm going to continue targeting the downside. Well, I mean, at the moment, what I'm seeing on the cash index is it is drifting lower. So yeah, let's see where we're going to open. Look, I don't want to overcomplicate sometimes life with the cash, because again, it's very important to see like during what's happening during the main market trading hours. Yeah, for now, like I said, I'm considering the downside scenario, especially if we do drop below the 24,186 zone. The German index DAX, beautiful decline. Look at this. Wow, what a push lower here. I mean, the market is not feeling the love, and most importantly, look, from the technical perspective, this worked out very nice, because I said to you that we were in this falling channel. We pushed higher at one point, but then we failed to we went for a new all-time high, but then we failed to stay above the previous all-time high. So that's where I keep on saying to everybody, like, whenever we have a scenario like this looks very bearish, and well, so far so good. It looks quite bearish, to be honest. I'm going to lean further south as long as we stay below the 100-day EMA, shown as the blue line right here, and I'm going to aim for the lower side of this falling channel. The FTSE 100, very quickly, beautiful decline. Everything is not feeling the love this morning. So let's see if the market can recover something during the US session, but to be honest, I think that the ongoing escalation between China and the U.S., with the absence of U.S. economic data, and with and the fact that the Federal Reserve officials are trying to help keep the morale up. Well, I mean, I think the market does understand that something is wrong, and everybody understands that. This AI thing as well. I mean, companies throwing out so much money into this AI. Where are they getting the money from? They're found their finance. They're getting, corporate bonds. They're issuing corporate bonds. They're, getting financing for something, for potential future profits which are not realized. And this is come on. We've been there. Okay, who are you trying to trick? Anyway, we understand all that, and hey, let's see how the market will play today. But certainly, it looks a little bit more bearish. The DXY, now look, the dollar index. What's interesting here is that it is reversing now, and holding above the 50-day EMA, which in a way is a good sign. I'm not, look, I said to you that I'm going to be bearish if we do drop below the crossroads of these two trend lines, and in a way this is kind of still could be the case, but maybe given the weakness right now that we're seeing in the stock market, maybe investors will kind of pick up on the US dollar as a safe haven, just purely on that. We could see a little bit of a retracement back up, but if this downside line continues to provide resistance, which is taken from the high of the 12th of May, then yes, I mean, the downside scenario remains on the table. VIX here, looking at the fear index yesterday jumped. Maybe that's what the market is also reacting to. So, or actually, on the contrary, this is showing that market participants are not feeling the love right now. So, okay, look, what can I say? I will continue observing the price action here, but certainly there is a chance for this one to actually drift further north. Let's jump into the currency world, ladies and gentlemen. AUDUSD, look at this. Look at this beautiful thing. We are resting near this upside line. I talked about it, and I said that if we do break it, I will go lower. In a way, given that AUD is a risk currency, and we're seeing a little bit of positivity in the US dollar, maybe this could play out nicely for the bears, but keep your eyes on this upside line. If that gets cleared, certainly more sellers could join in. AUDNZD, beautiful move to the downside here. We're clearing the lower side of the range, but look, we're clearing it, but I want to see the body of the daily candle staying below this area, below this 1.1315. If we do, then yeah, I'm going to go further south. And in terms of further south, this is where I apply my beloved Fibonacci level here. And yep, 23.6, 1.1258 zone, somewhere around here could be the next potential good target. AUDJPY, beautiful. The market is not, like I said, the market is selling off, or actually not selling off yet, but not feeling the love. I'm trying to use the words carefully here. Not feeling the love, and of course we can see this reflection in AUDJPY, which is our risk on, risk off currency. And yep, we are breaking this upside line right now. So in a way, yes, we found good support near the 200-day EMA, but if that gets cleared, yep, further declines, ladies and gentlemen, are possible. EURUSD, okay, pushing higher here. Then, like I said, this is what I was talking in the beginning of this video, that the ECB doesn't really need to do anything right now yet, because the euro is just stronger, just basically on the fact that other currencies are weaker, and for this one, I think that there is still some room for some upside, maybe towards the 1.1779, but again, let's not rush into conclusion, because we're not far from that 20 SMA in this Bollinger band. So if we somehow drop back below it, if somehow the USD picks up buying interest today, just because, like I said, purely on the safe haven status, then look, we could see sharp interest rate reversals. EUROCHF, this is the interesting bit. The Swiss franc is right now the stronger one. Of course, that's the safe haven as well, and we are at a critical spot right now. Look, this is the whole area, basically. This is the whole area that I'm watching, and if we do clear this 0.92 1124 zone, somewhere around here, ladies and gentlemen, we are going towards levels that we saw back in 2000 and when was that, 15, when the Swiss central bank untied its its Swiss franc from from the euro in terms of it. It wasn't no longer a fixed amount. So yeah, I mean, look at this. This is a monthly chart, and we are looking at some lower levels here. Let's see if this is not going to end up being as good support, and if it doesn't, yes, like I said, lower levels are possible. EURJPY, euro. Now this is the interesting bit. Like I said, Japanese yen is kind of holding that safe haven status for now, so we are carefully monitoring the situation right here. There is a chance for this one actually to drift further south, so I just redrew this upside line. Again, it's a tentative one. It's not very subjective. Not very objective, it's more subjective. So so yeah, there is a chance for a larger correction back down, but for that I would need to see a drop below this 175 territory. If we do drop below the 175 and stay below it, I'm leaning towards a larger correction back down, so something like this. Let's have a look at Euro NZD. Okay, this one continues to rally. Look, this one is interesting. It's we have these historic spikes here, and well, for now we're doing another one. Let's see if we can go further north. So whenever we get something like this, basically this kind of indicates market crashes. So this was a crash. You know, these come a little bit after the crash, but again, we're going through some interesting times right now, so I'm not really excluding anything. So again, we had like pushes here into that, you know, when the financial crisis started. So this rallies, but then after a few years, it kind of reverses back down. So it kind of rallies into the crash more. So maybe this is where we're heading to, but again, you know, let's see. Jumping into GBPUSD very quickly. Okay, look, this here is a little bit of a different story. It's pushing higher. The idea here, which I talked about, the falling wedge pattern, I talked about it in the beginning of this week. I said if we do, it looks like a falling wedge, which is a bullish indication, and but we need a clearance through the upper side. We got the clearance. We made a move higher, but we found resistance near these EMAs. So if those EMAs get cleared, then yes, I'm going to go higher. But at the moment, I'm just carefully observing the price action. Jumping into GBP CHF actually as well. Beautiful. Yep, we are actually doing some historic levels already, and hey, 2022. Maybe we could end up traveling here, but let's not, you know, get ourselves, you know, let's not get our hopes up yet. For now, I'm watching this. I want to see what's going to happen at the end of the day today, because we're at a critical spot. So let's see how the week will end. If we do stay below this hurdle, yep, further declines are possible on GBP CHF. USDCAD pushing higher still. So look, it's an interesting one. It's not the most exciting pair right now to trade, but certainly it is at an interesting spot. So for now, I'm going to continue targeting the upside here as long as we stay above the 1.4016 USDJPY. Beautiful decline. Yes, the yen is picking up buying interest. So okay, what can I say? Okay. For now, it's you know, I think that there could be some more downside on this one, just because the Japanese yen right now is, and Swiss franc are also picking up buying interest. However, what's interesting here on the USDCHF, maybe this could get a little bit of a hold up. Who knows? Okay, this is a very subjective thing. This needs to go. To be honest, it's not really very interesting. I think what I'm gonna do here is I'm gonna keep an eye on this little hurdle here. 0.7872, which we kind of tested already, and we now are seeing a rebound. So, you know, to be honest, I would really like to see a rebound. I have to admit, I was a little bit more bullish on this pair. I was kind of aiming for this territory, but well, I mean, there we go. We broke the upside line. It kind of opened the door to some lower levels. Look, I'll say it this way: if we somehow manage to climb back above the 0.7904 zone right here, I'm considering then a little bit of a correction back to the upside. US dollar against the Argentinian peso. Okay, look, I mean, this one is what can I say here? Look, the the U.S. government gave a little bailout money, some bailout money for the for Argentina, and uh, I mean everybody's seeing this as a loan or something, but to be honest, I think it smells like more like a bailout, and it doesn't really. I don't think that the money will go back somehow. But anyway, a lot of people are unhappy, especially the U.S. farmers. Um, okay, can't please everybody, right? And probably that these are the words of the White House administration right now. But anyway, you look at your own best interest. But is this gonna help Argentina to survive? For a little bit, yeah, but I think that the bigger restructuring I think they need to go through blood first in terms of in the economy before something can maybe good can happen there. It's very difficult. Maybe there is somebody who can fix the situation in there, but certainly it's a tricky one. Let's jump into the commodity world, ladies and gentlemen. Gold. I mean, look at this. This is madness. This is madness. This is just crazy. And what can I say? For now, it's we went for a new all-time high. We came very close to testing that 4,400. Now, look, for me, the more important thing is that we have reached my target. My target was here, the 261.8. I talked a lot about this in my webinars, in my videos on our Markets.com channel. Show you what I'm talking about. So yeah, look, just a second, where's my, there we go, that's the channel. So this is what I was saying. So basically, I talked about the levels here, gold and silver. This is what I talked about 2 days ago, and I said I'm aiming for this 261.8, which is around the 4,310. We surpassed that like easy, but we were first around here. We were first around 200. Look, the weekly, this is a weekly candle. Look at this. We started off the week around 4,000, right? We hit that last week, but then this week we started around 4,000. Look where we are right now, 4,300 and kind of 50, right? I mean, this is just crazy. This is just, I don't know. I mean, is this hyperbolic move? This is something that I would say you need to be very careful about. Whatever comes up like this must come down. And I don't want to be, let's say, the pessimist here, but come on. I mean, you cannot really sustain this. And I think, like I said, people are now talking about 5,000, but I think that people are talking about 5,000 maybe a little bit too early. Look, at this point, I would say I will take a pause. Although, previously when we were here, I was still saying, look, there is still more room for some upside. At this time, I'm kind of a little bit on the cautious side because I don't know. This is way too parabolic for me, and I really doubt that this can be sustained. But anyway, let's see what's going to happen here. Silver is on the same story. Look at this monthly candle. I mean, we went for a new all-time high. This is the third time we're doing such a parabolic move on silver. And the question is, can this be sustained? Well, no, because again, look, we had these major moves to the upside here in the past as well, but the next month kind of it quickly reversed back down. So let's not rush into things, of course, but it's interesting. Yes, the demand is there, but if we're seeing the stock market right now going a little bit lower, now this is the thing that I talked about in my previous videos, and I really warned you like a few months ago as well, that whenever we look, yes, gold and silver is a safe haven for sure. This is people put their money into it, and well, first of all, whenever we start seeing everybody talking about it, and everybody's now inviting you to invest. No, you should have invited me to invest earlier. Now you want me to invest now? No, it's I don't go at these levels, So I know it could go still a little bit more maybe, but it's becoming way too big of a gamble. So what I'm saying is that be careful, ladies and gentlemen, because again, not everything is gold that shines. you know, and there could be issues, and we do go through these, like I said, cycles when we spike like this, and this is a historic moment. I do understand the temptation to short this, but as much as I would like to say go short, no, because I cannot really, because it's a problem here. We could see this one rolling further north here, and this could be an issue. So be careful, ladies and gentlemen. For now, it's like I said, it's very interesting, but at the same time could be a bit problematic. And another thing is that I said to you in my previous sessions, like for a few months ago now, during, or actually, it's always I've been saying this, that if you're seeing the stock market suddenly rolling over, and if it does lead to some sort of bigger issues in the future, gold is not going to maintain its strong position. Why? Because I understand that all central banks or governments have bought gold and silver a lot, but if the times hit hard, they're going to start selling those metals very quickly. Why? Because they will need cash is to support the electorate, so to keep the people happy, and you're not going to start suddenly printing money, right? No, you're going to tap into your reserves, and this is what we are, and I think that this is what we could get. So we could get a tapping into those reserves. So long story short, if you're looking for some opportunities in gold and silver, I would say maybe you have missed it for now. I'm not saying that I'm bearish on suddenly on silver and gold. No, I would like to be a little bit more bearish, to be honest, but I'm waiting. I'm waiting for a signal, and I want to see what's going to happen next, to be honest, because at the moment it is just unbelievably, I wouldn't say stupid, but that's not stupid, but it's an interesting period we're going through right now, for sure. That's for sure, and we need to accept that. So let's see what's gonna happen next. At the moment, like I said, it's very attractive. I think that there could be more interesting moments here. But in interesting moments, I mean, to the upside, but maybe we're running out of steam just a little bit, in my opinion. Anyway, we'll see how it goes. We'll see. For now, I'm watching this very carefully, but it is a historic moment. Platinum. Similar story, upside. Palladium, this one, another one. I called out this one. I said, look, 1,250 in the beginning of this month. I said that to keep your eyes on this barrier. There we go. We had the push, but now the question is where we're going to stop, and I'm not really examining, any. For now, I'm just observing the price action. To be honest, I'm not really going to get involved in here. Copper, again, similar story. Observing the price action. Looking at the the all-time high here, fantastic, great, but we fell back below the 1,000. That's interesting. If we remain below the 1,000 mark, I will consider maybe a little bit of a retracement. Let's jump into cocoa. Continues to slide, but this is a monthly chart. Still, these are monthly charts, and I want to show you the bigger picture, basically. So we found good support near this upside line. Maybe a little bit of a retracement back up could be possible going into the holiday season. Holidays, chocolate, maybe. But yeah, sure, for sure, it is an interesting moment that we're going through. Soybeans, look, for this one, I need a daily chart. This one's still not moving. I think that they're waiting to see what's going to happen with the meeting between the two leaders, the China and the US leaders, and then we'll see maybe some sort of like an explosion. We're for sure getting a little bit of a squeeze here, so maybe that's what we're waiting for. Sugar. Sugar, it looks a little bit bearish, looks like a bearish flag here, so more downside potentially to come, as long as we stay below the 16 mark right here. If we do push above it, I'll consider a slight move higher. WTI oil continues to slide, and hey, I said it before, and I said it in the beginning of this week, and I will continue saying that I am still bearish on oil. I'm still bearish. Even though we had these retracements here back up to $63 and blah blah blah. Look, I said no. I mean, this is we're having a demand problem in a way. You know, China is in a slowdown a little bit, so that's the biggest oil consumer. And yeah, this is what we're seeing right now. And OPEC Plus continues to increase production. So what do you want? I mean, and this is a question to the bulls. What do you want? I think that there, yes, could be more downside. $55, and this is the one that I'm watching here. So if we do clear that area, great. I'm going to go further south. Natural gas, we remain below psychological 3, and we are now testing this upside line, which, look, if it breaks, then I will go for some lower areas, to be honest here. So yeah, if it breaks the upside line here, then my next target is the 2.77 zone, or maybe even this lowest point of the current lowest point of this year, near the 2.62. Ladies and gentlemen, I am very happy because Bitcoin is doing exactly what I asked it to do. Look, yesterday I threw out this little reels, this video on my professional Instagram account, and you can find it there. You can follow me. Basically, and also on Markets.com Instagram account. I talked about this and I said that, look, we were hovering just slightly above the 110 zone. It was a key area of support. There we go. We broke it. And what I said next was that my next target is going to be the 103 zone, which was basically the low of this the current lowest point of October, because of the flash crash we had on last Friday. And then if that gets cleared, in general, I'm aiming for that 100,000 zone, which is basically the 50% retracement on the Fibonacci retracement. Measured from the current lowest point of this year to the current highest point of this year. So there we go. We're getting this move here to the downside, yeah. For now, I'm gonna be leaning still towards the downside as long as we stay below the 23.6 here on the Fibonacci, or 38.2 on the Fibonacci retracement, and of course this 200-day EMA. BCH-USD, there we go, beautiful move. Dropped below the 200-day EMA. I talked about it. Now the big question is, can we drop below that flash crash low, 475? If we clear that, I'm going to go lower. A Ripple, yep, continues to slide. I talked about this level in this week in one of my shows, and there we go. And this is working out nicely. Ethereum as well, drifting lower. What I'm seeing here is a nice move, a nice move to the downside, and I think that there is a chance of traveling towards the 200-day EMA. LTC USD, yes, the same story. Basically, all the cryptos across the board are drifting lower. We're dropping below the 90.30 zone right here as well, and my next target is is this one right here. I'm aiming for the psychological 80, and then maybe below that in the 76.40. Dogecoin, okay, now Dogecoin is a little different animal here. For now, yes, I'm leaning towards the downside, but I'm carefully monitoring this 0.1785. I want to see if it's going to rebound or not from here, but if it doesn't, then okay, great. The same path as for everybody else, to the downside. But let's keep an eye on that one. Polkadot, I like this one, and I talked about this psychological 3 level in general. I said that, look, if we do drop below 3, then I'm leaning towards the downside, and so far so good. We're drifting lower. I don't know where the next potential target here could be, because again, we're going into these historic levels. Let me just see if there is something makes sense, but no, I mean, look, I like this area. I like the area below 2, so I don't want to rush into things yet. Finally, Tron approaching key important area of support, so let's see what's going to happen here. If we do drop below this 0.3080, then yes, great, more sellers here could join in, and we could target the 200-day EMA. In general, I like Tron. It's more of a calm crypto, because look at this. Friday's decline was okay, it wasn't something spectacular, it was moderate, and that's what probably I like about this pair, TRX USD, because it kind of acts more of a currency. I'm aiming for the downside, but a clearance of this 0.3080 zone is needed. But then I'll aim for the 200-day EMA, or maybe a little bit lower below that towards a 0.2985, and then we'll just take it from there. Ladies and gentlemen, that is it. That is a wrap. I hope you found it useful. I tried to be brief and quick in order to fit all the information into this webinar. I hope you liked it. I hope you found it useful. Thank you very much for watching and listening. As always, ladies and gentlemen, stay safe. Have your stop losses in place. Risk only what you can afford to lose. Don't overtrade, and everything will be fine. And I shall see you next time in my next little video update, and that's going to be today. I'm going to do a little video update later on, so keep your eyes. Do subscribe to our YouTube channel. But in terms of the Markets Talk webinar, see you on Monday, ladies and gentlemen. Have a beautiful weekend. Bye-bye.